Good morning and welcome to the Phil Stock World Daily Wrap-Up Show. I am Royston Bond III. With me, as always, is the lovely Miss Moneypenny.
Hi, hello world, so good to see you all this morning. Did we have a nice week in the markets?
Oh yes, rather so. Last week on Friday, Phil pointed out that Dr. Bernanke had promised on Thursday to continue handing out free money, which meant we had to get more bullish.
In Friday, February 4th's Morning Post, Phil said, "Yes, hyperinflation is coming. We are absolutely long-term bullish. More unemployment means cheaper labor, and Bernanke already told corporations that high unemployment will keep the free money flowing. So this is a time for celebration on Wall Street, not panic."
Quite. Phil also observed at the time, the only time Wall Street panics is when the banks lose jobs and bonuses. Commodities are flying in anticipation of more free money, and if you are thinking to yourself, what will it take to drop the markets rioting on Wall Street? Phil said, I would direct your attention to Egypt, where they are rioting in the streets while their leader prepares to leave the country with an estimated $40 to $70 billion that he has accumulated on his government salary. How is the Egyptian market responding to an overthrow of the government, riots, looting and starvation? It is up 12.5% this week.
And Egypt finished this week up again.
Yes, stunning really.
I liked Phil's song choice that day, "Kill the Poor." Very appropriate.
Well, it does seem to be Dr. Bernanke's main objective.
How do we avoid being poor then?
Fortunately, Phil had an answer for that. On Saturday, he published another round of breakout defense trades that take full advantage of inflationary market conditions.
Oh, I love those breakout defense trades. The last round bought me my new boobs.
Yes. They are rather smashing.
Why, thank you.
Please, Moneypenny. I was talking about the breakout defense trades.
Which, I will remind you, paid for my boobs.
Yes. Moving on then. As Phil said on Monday, we may complain about how the game is rigged, but if practically every single roll of the dice comes up 7 or 11, you can't blame us for betting on the trend.
The trend is your friend.
Quite.
In chat on Monday morning, Phil said to Button, "I hate to say it, but now is the time you should get more bullish. We have 5 solid support levels to watch, and they should provide support now, on the way down. So you can buy now, here, and that gives you a nice exit signal on the way down. If you wait 2.5%, then you will be buying in an area that can easily retrace back to these levels."
That is correct. Those support levels were Dow 12,020, S&P 1,300, Nasdaq 2,750, NYSE 8,200 and Russell 777.
We finished the week well above those levels. Did you know that 2.5% over S&P 1,300 is exactly 1,332? That is our 100% move off the bottom.
Well, the markets certainly seemed unstoppable this week.
I believe that is why Phil suggested adding 10% of our sidelined cash to bullish positions on Monday morning. His comment was, coming off 75% cash with a 60-40 short position is about 10% long. So another 10% on the long side flips you to 20% long and 15% short, which is about 60-40 long with 35% invested.
Another bullish sign members were watching was the Baltic Dry Shipping Index, which did, in fact, bottom out this week and began to recover.
Isn't that why we are playing Eagle Bulk Shipping and Dry Ships Incorporated?
Yes. We have some March calls in the 25K portfolio. Phil feels that shipping fleets will get more use in the coming quarter.
I doubled down on Thursday. Mama needs a new shot of collagen.
Yes. On Tuesday, we discussed the indexes approaching those 100% gains, and, in the morning alert, Phil said to members, "We're looking for a sentiment change when Bernanke testifies, and, if not, then it is time to get more bullish."
If anything, I would say that sentiment turned even more bullish after Mr. Bernanke's testimony.
Yes, we had a very minor correction Wednesday and Thursday, but on Friday, we were off to the races once again.
I liked Phil's comment on Wednesday, where he asked, Can we expect even a little pullback after a 100% run, or is it to the moon, Alice, and maybe Mars and Jupiter while we're at it, as the Federal Reserve's multi-trillion-dollar thrusters send us to the stars?
That's right. Art Cashin had brought up the subject of stock market physics, something we often discuss at Phil Stock World. Unfortunately, 2 of the 3 stocks that Phil cited as being overpriced, Netflix and OpenTable, continued to go higher. Only Priceline seemed to be topping out.
Yes, I shorted Netflix, and now I can't even afford to eat at Chipotle this weekend.
Moneypenny, you know not to put all your eggs in one basket.
Actually, I've had my eggs frozen. They are in test tubes, not baskets.
Oh dear.
Hey, Royston.
Yes, Moneypenny?
How did Ron Paul describe Ben Bernanke's attitude on Wednesday?
I believe Congressman Paul felt Mr. Bernanke's attitude was cocky.
What?
Cocky.
Oh, please, say it again.
No, I will not.
Spoil sport. It was Phil who said on Thursday morning that we should buy the effing dip.
Yes, that was actually a very good plan.
But he did say effing.
Yes, there was that.
At least the DDM trade hit our goal. That one was from Thursday morning's alert, but Cisco is a disappointment, so far.
We did have a marvelous time shorting oil as well.
Oh yes, over and over again. I loved it.
While that may have been fun, Friday's action was just plain frustrating. Momentum stocks led the market higher despite the continued sell-off in oil.
Phil pointed out it was very much like the markets in 1999.
Quite. Madness was the term Phil used to describe the action.
Well, join us next week for more madness, I suppose.
Yes, and have a lovely weekend.